So everybody be cool with the F-bombs and all of that. Be chill. All right. Let me share my screen and then we can get going. There she is. Awesome. You guys can see that?
Got it.
Cool, cool.
Yay.
Awesome. Okay, so a little bit of quick math for those of you, because I know there are several people on here who have not bought a house before. So just a little bit of quick rental math for everybody. Math is so fun. Let's just say, for example, renting versus buying, right? Your rent is $2,000 a month. Wouldn't that be lovely? But let's just say for kicks and giggles, that's what it is. What are you spending per year on your lease? It's going to be $24,000 per year. And at the end of the year, what do you have? It's pretty much like you've paid for food, right? There's no at the end of the day, I have something. You paid for 12 months of a roof over your head. Fantastic. We all need a roof over our head. However, when you purchase a home, it looks a little different because you actually have an asset, an appreciating asset, which is different than a car, right? A car is a depreciating asset. The moment you buy it and drive it off the lot, it now is worth less than when you purchased it 5 minutes ago. That is not how a house works. So let's just say you have a $400,000 house that you've purchased. Your monthly payment is probably going to be somewhere between $2,300 and $2,500, depending on a handful of variables there. Let's just say you put 5% down and you have a 6% interest rate, right? Just for estimating states, right? So that year, 1 year's worth of mortgage, you have paid $27,600. What have you accomplished with that year's worth of money? You've paid down your mortgage. Instead of owing $380, you now owe $352. And your asset, your house, has appreciated. Year over year average of home appreciation is 4%. Historically speaking, it is kind of creepy how accurate that is. Without weird things in the market happening, like there's no bubble burst or there's no crazy inflation like maybe 2021 was. That was a little bit historically, a little more than 4%, right? But historically speaking, 4% year over year, right? So now at the end of the year, instead of owing $380, you owe $352, and your house is worth $416,000. So you have an appreciating asset. You have put your money towards something instead of just like, okay, I paid for 12 months of living and that's it, done and dusted, right? So I know that question was asked a couple of times on our little questionnaire is like, hey, renting versus buying, what's the difference? The difference is your money means something, it's going towards something, and you have an asset to your name at the end of the day that you can now sell and make money off of. So that's a pretty big deal for most people.
And Corinne, I just wanted to point out too, there are you actually can write off your interest as long as it's your primary residence on your taxes. So remember, you're also getting that benefit of home ownership that oftentimes you don't think about, but is also a benefit of home ownership is being able to write off that interest on your primary residence.
Exactly. So lots and lots of benefits to it, but I just thought a little bit of that math might help go a long way. And not that we all love math, but because you are here, I'm assuming you are wondering, what is the market doing right now in our area? Okay. So these are numbers compared to what it was January of 2025. So look to the far, it's left. Yep, that's the one. The 2026 local market. I gave both Gwinnett and Forsyth County numbers. So in January of 2025, the median sales price in Gwinnett was $423,460. In Forsyth, it was $630,000. There's a pretty big difference between those two areas, even though they butt up next to each other, right? Simply because Gwinnett is so much larger. So it's taking in a lot more scope of residents, right? And because Forsyth County is right on the lake, so we have more of those nice, cushy $1 million houses, right? So you're going to see a pretty big difference there between Gwinnett versus Forsyth median average sales prices. This year, as of like last week, comparatively to January to now, or January of 2025 to now, the median sales price is $411 in Gwinnett and $600 in Forsyth. Do we see why we're happy? Yay, prices are going down finally. This is the first time in 5 years we've seen any movement towards leverage for a buyer. So I'm pretty stoked about it. Excuse me. So then we have month supply is going to be the middle box. Month supply means how many months is it going to take to sell the houses that are on the market right now? If not one more house popped on the market, how many months would it take to get these houses sold? In January of 2025, in Gwinnett County, there was 2.6 months. And in Forsyth County, there was 2.8 months worth of inventory. You look at now, January 2026, you'll see there's 3.2 months for each county. So that means more houses are available this time than there was this time last year, the January of last year. So one more stat that I want you guys to look at is sold price versus list price. So that means if I listed a house for $100,000, what did I get the house for? Did I get $100,000 or do I get 95 or did I get 90? What did I get, right? So you'll see in January of 2025 in Gwinnett, it was 97.4%, which means if I listed a house for $100,000 on average, the seller was getting $97,000, not $100,000, right? And then in January of 2025 for Forsyth County, it was 96%. Now you go to now, instead of 2025, look at the numbers now, they've decreased. So now sellers are getting 96% of what they're asking in Gwinnett County and 94% of what they're asking in Forsyth County. Okay. So all of this data means something. There's a story to be told here. All of these numbers matter because this is what's telling the real story of what's happening right now here in our area. Because headlines, like national headlines of what is happening in real estate, really don't matter. Real estate is local. It's localized to a specific property, to a specific neighborhood, to a specific county. Lots of things go into what the market means for you right now. So with these numbers, we now know we are seeing that shift from an extreme seller's market for the past couple of years to, hey, we're seeing some good things for buyers right now. So real estate follows the exact same principles that anybody else does in the economy, right? Whenever there's supply is up and demand is low, guess what happens to prices? They go down. But when demand is high and supply is low, prices go up. So the same thing happens in real estate. So right now we're seeing a little bit less demand and a little bit more supply, and it's showing in house prices. So that means there is more room to negotiate than there has been in a long time. You can negotiate price, you can negotiate closing costs, you can negotiate repairs, all of that stuff. And we're going to go into what that looks like here in a minute, because that might sound like a foreign language to some of you right now. There are fewer appraisal issues. An appraisal issue can kill a deal in a heartbeat. And we'll talk about what that looks like and how to avoid them too. It also means you can take your time. Not that long ago, I was having to advise my buyers to like, hey, we saw it today. We have to write an offer this second, like in the driveway. We don't have time to wait. That's not fun. That's stressful. So there's a little bit more time to sit back and go, okay, what do I want my offer to be? Let me sleep on it. This is now possible to sleep on it. Oh, thank goodness. And a slight decrease in asking prices. So that is a little bit of the snapshot of what our market trend is happening now at the beginning of 2026. Candace, do you have anything to add to that? Oh, you're muted.
And no, I think you covered it very well. I don't have anything to add to that. I think the big takeaway there is knowing there are more options than there was before. So you're not having to rush to find it is also a big key player as well, because when you're making an offer, you've got to have time to talk to your lender in that space. And sometimes there wasn't time to negotiate on exactly what you needed. So now you have some options and some time. So it really makes a difference in the home buying currently.
Yes. Yeah. Huge difference. Exactly. So cool. So just to give you guys a synopsis of what the market is doing, this is all good news for you guys as buyers. So yay. Now I want to break down what the process looks like too, to be able to answer everybody's questions about what does it look like? Okay, Kathy, I see. I got you, girl. No worries. If you want to ask questions while I'm chatting, type in the chat box. If you're at work, totally fine. And then also, guys, I know I talk fast. Please interrupt me if you've got questions. Most of you know me, and you know you have to interrupt to get a word in edgewise anyway. So unmute at any point if you want to ask questions about any part of the process, or pop it into the chat if you're at work like Kathy. It's totally fine. Hold on, let me just make sure that, because I have a couple of text messages, that it's nobody trying to get into the meeting room. Nope, we're good. All right. Okay, cool. So let's talk about the process. What actually buying a house looks like. What are the steps? What's the timeline? What does it look like when you're actually making an offer on the home? First and foremost, Georgia is, not every state works the same. So if you've purchased a home, just not in Georgia, it's important to know that having a real estate agent represent you in the state of Georgia is important. We are a buyer beware state. So that means when you go under contract with a property, the seller does not have to disclose anything other than things that are dangerous. Like, hey, I know there's a hole in the roof and there's mold in my attic. That's dangerous. You have to disclose that as long as they know about it. So especially in states that are considered buyer beware states, having somebody who's a local expert to kind of walk you through this process, wildly important. So you're going to want somebody who you can trust to guide you through the process, make sure you know what you're doing. More often than not, my job is, one, to make sure you know what risks you're taking, know what the contract says, and not only, I'm kind of project manager, I'm going to walk you through the whole process, but my job is to save you money. And who doesn't want to save money, right? Negotiation is a huge part of what a real estate agent does. So that is one of the very first things you're going to do, is have a relationship with somebody you trust that's been in the industry for a long time, so that you know that they know what they're doing and they're going to help you through that process. Once you've done that, you're going to want to have a lender and a pre-approval letter. What I have seen happen when people do not put this at the beginning of the process is they start looking at houses and walking through houses without a pre-approval letter, and they fall in love with their most perfect house that they've ever seen in their entire life, and their heart is invested. And then they get a pre-approval letter, and guess what? They can't afford that house. They thought they could, and they can't. And now they're heartbroken. Not worth it, guys. Know what you can afford before you even start looking at pictures. Know what you're comfortable with. Pick price first, which means you have to talk to a lender. Candace?
I don't want to be the heartbreaker. Please don't make me be the heartbreaker.
No, it's mortifying, honestly.
It's horrible.
Do it. What will happen, because most agents are not going to walk you through a house without a pre-approval letter. That's kind of best practice. So most of us are going to go, guys, no, we're not walking into a house without you knowing you can afford it. I'm going to interrupt, Corinne. And if you have an agent that says, and I'm not, says, I'll show you a house without a letter, warning,
I'm
Red
just
flag.
telling you guys, they don't have your best interest in mind. Corinne can't say that, but I can't. They don't have your best interest in mind, because this is part of the equation that you don't want to miss, because things will happen,
Mhm.
like Corinne explained with being heartbroken. So make sure, if it's not us, but just know that a takeaway from this is definitely making sure that you have somebody you trust.
And having that pre-approval letter gives you the confidence to walk in and go, I am comfortable with this monthly payment in my life, and therefore I am allowing myself to fall in love with this house. The only time that's ever happened in my life is when I host an open house and people come in and they're like, oh, I'm so in love, I want to write an offer. And I'm like, great, here's my lender, go talk to them. And then they do, and they're like, oh, wow, I can't. I'm like, yeah, don't do that to yourself. So getting a pre-approval letter, selecting a lender, really the people who have your back and are going to help you, guide you through this process is your lender and your realtor. So you're going to want to have your team set up. Interviewing realtors and interviewing lenders should be one of the first things you do if you don't already know somebody that you're going to trust. So you're going to have your team set. We've got you. I've got your back. Candace has got your back. You know how much money you are happy to spend. Now you get to analyze your needs and begin your search. We are going to help you determine a need versus a want. So in your search, if you sit down and tell me, Corinne, I absolutely have to have a chimney. I have to. I've dreamed my entire life. My dream house has a chimney. I might kind of help you go, okay, well, what are your other needs, right? And you give me a list of other 10 needs. And I'm going to go, cool. I am going to show you houses that are in the right school district, that are in the right price point, that have the right amount of bedrooms and all of this. But you know what? I know a chimney is a big, big item for you, but it's kind of not that hard to add one. Maybe we don't have that on the need list. We have that on the want list. And then we see houses that, hey, if it's the absolute perfect house, can we spend $5,000 and add a chimney? Yeah, sure, you can. Not that hard. So we're going to help you determine that. The other thing you need to make sure of is that if you are not the only person buying this house, or you're not the only person making this decision, we're going to help you make sure you have those conversations. Like, okay, a chimney might be my desire, but it's not a deal breaker for my husband. So maybe we need to talk about that. So the other thing I always like to say with the home search, unfortunately, there is not one website with every single available house on it. Searching for the right home is always a team effort. There will be some houses that I see that you don't, and there will be some houses that you see that I don't, because there are about 20 million houses, house websites, right, that have all of these houses on them. So when it comes to looking online, don't limit your search. Go on Zillow, go on Realtor, go on Trulia. I'm going to send you stuff from the multiple listing services. It takes everybody to find the right house because there are just thousands of websites out there and they do not all sync up. So that's a group team effort. Any questions so far about the first 3 steps to kind of prep and get you ready for that? Make sense? Everybody recognizes all of these words because we're about to show you some words you might not recognize. Okay. All right. Once we're shopping for a house, that means, hey, we're scheduling, we're walking in houses, we're looking at what we love, what we want. Now we find one we want. Okay. Now we find one we're like, ooh, this is it. This is the one. Let's write an offer. An offer and a contract are exactly the same thing. We are going to write an offer with all of the terms of the sale on it, as in, hey, I'm offering this as the price. You're asking for $400,000. I'm offering $390,000. I'm asking for you to cover some of my closing costs. I need due diligence days. I need financing. I need my loan origination. Like, we walk through all of the terms of the sale of the contract. And that's what your real estate agent is for, is to walk you through it. We present that contract to them. And if they sign it and all parties sign, it now becomes the contract that everybody legally is bound to. Okay. But everything that is the terms of the deal is going to be written in that offer. The main pieces you're going to see within that offer are going to be the price. Obviously, that's a big one. If you're asking for the seller to cover any of your costs or any big repairs, how many due diligence days you're going to get. And that means, well, I'll go over due diligence here in a second. I'll explain that in detail. And what your financing terms are. So you're going to say, hey, I'm doing an FHA loan, which means I'm putting 3% down. And Candace is my lender, and I'm going to have the appraisal done and my loan all wrapped up and pretty and ready to go within 25 days. And the seller is going to go, cool, I'm happy to give you 25 days to do that, right? All of that's going to be written within our offer. Once we submit an offer, oh, hold on. I knew I was going to have a late comer asking me for a link. Hold on, let me text it to her really quick. Make sure that everybody can get in that wants to. Once we submit that offer, usual time frame is I'm going to know within 24 hours if that offer is good or if they're going to negotiate. So if we submit that offer at 7 o'clock on a Friday night, I'm probably going to know by like the next afternoon if they're going to go, hey, can we work on this price? Or you asked for 14 days of due diligence and that's kind of long for us. Can you shorten it? Or you put on the contract that you want to close on the 27th and we really want to close on the 24th. Can you guys do that? Those conversations are going to start in between the real estate agents pretty quickly. And that's when you need to stay close to your phone. These are the days that matter. I'm going to need to be able to get in touch with you and say, hey, gang, they're asking for us to do XYZ. How do we feel about it? This is what I think. What do you think?
Do not put a home under contract and go out of town. Like, please don't do that. You have to be available for this transaction.
Exactly. The amount of times people will go on cruises and I'm like, I'm going to need you to buy the Wi-Fi package.
Please, you need to be available.
Be available. I need to be able to answer the phone call. This moment especially, right? You're going to know within 24 to 48 hours max whether or not your offer is going to be accepted, whether or not they're going to counter the offer, which means we're going to negotiate, or whether or not they're like, nope, that doesn't work for me. I went with somebody else, or hey, we're like $20,000 off and no one can come to an agreement. So it's not going to take long once you've submitted offer to know for sure whether or not you're going under contract. Okay. That's a time that you're going to want to be available. Once you are under contract, you are then going to need to submit earnest money funds. Earnest money is like good faith money. As a buyer, you are putting down, typically the usual amount is 1% of the purchase price. So just for easy math, let's say you have a $100,000 house, earnest money's $1,000. Okay. This money is money that will be used to close. It's money you're counting on that's going to pay for, it's a part of your down payment or it goes towards your closing costs. It'll be used at the closing table, but you're putting it down up front because you're showing them like good faith, right? You mean it. You're a serious buyer. You're not somebody who's just putting their house under contract and then going to back out the next day kind of deal. There are a handful of moments in the contract that are really important to understand because it is possible to lose your earnest money if you're not careful. And that again is why a really good real estate agent who knows what they're doing comes in handy, because another big part of our job is to protecting you is protecting your earnest money. Okay. So as I go through the next couple of steps, I'm going to give you some green light, red light moments of like, hey, your earnest money is safe in this moment. And okay, this is where there's risk involved, where you could potentially lose your earnest money. Okay. Any questions so far about writing an offer, getting an offer accepted, and what earnest money is and does? Yay. You guys are smart. Candace, you good? Was there anything I missed in there? Okay.
No,
All
you're
right.
good. I'm sure the questions will start coming in a moment.
Exactly. This is where it gets fun. All right. You're under contract. Your first big hurdle with a contract is your due diligence days. This is why we have a buyer beware state. That's why I bring it up, because your due diligence days are your days to lift the hood, kick the tires, make sure that you are happy with the house. These are your get out of jail free. Okay. If you back out for any reason, you change your mind, it doesn't matter. You find a different house you like better. You find mold, and that's a deal breaker. Any reason at all, you can back out during these due diligence days. This time period is negotiable. All right. So sometimes due diligence days is as quick as 3 to 4 days. Sometimes it's as long as 10 to 14 days. This is one of those things where your realtor is going to get you as many days as they can, but it is negotiable. So that might be one of the terms that the seller is going to come back and say, well, you asked for 14 days. Do you really need 14 days? Can't we do 10? That might be part of the negotiation process. And speaking from experience, what you do during your due diligence days is you hire an inspector to come out there and write a book on this house. Okay. And they are going to pick it apart. They're going to tell you everything you need to know. And that's when you look through it and go, okay, am I cool with all of this? Or am I going to ask for repairs or money back or whatever the case may be? Candace?
No, yes, I think that's an important part. Again, we are a buyer beware state. So you would even get something from the lender who says, no, you might chat GPT something, and let's just go ahead and put that out there. It's not always accurate when it comes to these type transactions. It's just not, because every individual property, every individual is different in terms of financing as well. But I go back to say is that when you're looking at this time frame, make sure you do your due diligence in getting that inspection. Lenders do not require it, and Chat GPT is going to tell you that. And we're going to send you a notice that says it is not required, but it is highly recommended.
Yes.
And we'll explain more about that in like 2 steps of what's the difference between an inspection and an appraisal. I know Corinne's got it coming up, but that's why. So make sure.
Yeah. And this is an important period.
Oh, we have a question.
I was just wondering, at the onset of that due diligence day that you're saying is typically 5 to 7 days, who sets that? Because I think every time that I've closed on a home, it's always been 7 days, and that 7 days feels so, rushed.
Yep.
I didn't know it could go up to 10 days. I had no idea.
Oh yeah. It depends on the market. There was a time where I regularly got 14 days for my buyers of that due diligence days. So it is going to depend on, am I having to outbid somebody? Is there multiple buyers interested in this property? Because if so, what looks more attractive to a seller? The fact that a buyer can back out within 5 days, or are they going to be cool giving me 10? So if you're competing with another buyer, that normally shortens the amount of time you get. But if you're not competing with another buyer, I can usually get you about 10 days for most of the time right now. And that does fluctuate with the market. It fluctuates with the seller and what's important to them. But I would say you can pretty much bet on anywhere between 7 to 10 days. On a good one, I can sometimes get you 14. Does that make sense? Okay.
Okay, thank you.
Yeah, that's an important question. So, but again, guys, this is your get out of free card. Now, let's say you find a couple of things and you're like, if the seller does XYZ, I'm fine moving forward with it. I didn't realize that there was this damage to the house that's going to cost me a little bit more than I thought. So can you please fix this, make sure the dishwasher is working, and give me a home warranty for 1 year that costs like $500? You can ask for all of that during the due diligence time. So you can renegotiate based on what you find in the inspection report. Again, I have vendor relationships with a lot of people in the industry. So a lot of what I'm going to do is help comb through that inspection report and tell you what is expensive, talk to my guys, get you in connection with someone who does that type of repair for a living so that you can know, what are we talking about money-wise when I look at this repair report? This is always a scary moment when you have not bought a house before, because you don't realize, like, they give you an actual book, all right? And you're like, oh my gosh, what is a GFCI? Why do none of the outlets have GFCI? What am I gonna do? It's $10. It's okay. We can fix that. So don't let that moment panic you. That's why you have professionals helping you. We'll walk you through the cost and all of that. So you're comfortable by the end of the due diligence days. You should come to an agreement where you're fine with the property as is, or you have agreed with the seller to fix something or give me money to fix it. One of these two options. Okay. Then the mortgage stuff. While you're going through due diligence days, oh yeah, nice to see you, Kathy. I'll send you the link. Kathy had to leave. She's in a little chat. So obtaining your mortgage finance. Candace is going to be your go-to for, hey, not only do I need to make sure the house is the way it needs to be and in a condition I'm happy with, but I need to make sure that I'm going to be able to qualify for this loan, because a pre-approval letter is basically pre-approving you. Now you have to go through the entire approval process. So you're going to be asked for a lot of paperwork. And the underwriter is going to start going, okay, let's fine tooth comb all of this stuff. So you're going to have a little bit longer to get your financing good and approved. Usually we're going to be able to get you anywhere between 21 and 28 days in a contract to make sure that your loan is solid. There are a couple of things that you need to make sure you really don't do during this time period. Stuff like buying a car.
Quitting your job.
Don't quit your job. Don't open a credit card, please.
Don't buy your furniture yet. Lots of things.
Exactly. And that's where Candace is going to come in and be like, okay, you're applying for a mortgage. Pause all other financial situations. Don't do it.
Don't do anything.
Yep. And if you have a question about can't I, just pick up the phone and ask before you do it.
Absolutely. Yes, please. Please do.
Absolutely.
Save deals that way for sure.
Big time. So while we're doing the process of, hey, I'm doing my due diligence days, all of these days start on day one, all at the same time. So it does get to be a lot to juggle, which is why you want to be in good communication with everybody who can help you figure out what comes next. Because we're doing due diligence days at the same time as the underwriter is asking you questions and Candace is asking you questions. It's all happening simultaneously.
So one thing to just point out too, we are going to do our very best. I will do my very best to get as much documentation up front before you ever make an offer, simply for the reason that Corinne stated, because we want you to focus on the home and not the financing unless absolutely you need to do that. I want you to focus on the property and feel comfortable with the property you're buying, because we've already established what your financing looks like, what your documents, what I have. We might have to update a few things, but it is my goal as a lender to make sure that is done way in advance. So you can focus on the property and not your loan for the.
Exactly. And one of the questions I know we had on our little questionnaire, Candace, that maybe you can speak to is, how long before you start shopping for a house should you get pre-approved?
It is never too early to start getting pre-approved. And I'm simply just going to give you guys a couple of examples. One of the best times to get pre-approved is if you're thinking about buying. Let's go ahead and have the conversation. Let's do the loan application. We can do a soft credit pull. It's so important that we do that because we're able to look at your credit profile. Say you pay cash for everything. Mm-hmm. Well, you may need to work on improving your credit. It's not that you have bad credit. We just need to establish credit. That's something I can help you do during that time. If there's something on your credit you may not even know about. We found stuff on your credit that you don't even know about. So we want to make sure that your credit is in place, that maybe you need to work on saving additional money. Maybe you have a different financial goal in mind that we want to help you achieve in order to buy. So there's lots of processes that we want to help you with, but the key is getting the application done as early as possible. So you know, and we put in place a path for you to take and steps to get you where you want to go. So that's why it's so important to do it as early as you're thinking about. Like, go ahead and do that.
And a soft credit pool, is that going to affect my credit score?
It is not.
Oh.
It is not. So on a soft credit pool, it basically pulls all of your information, but it doesn't hit you as a mortgage or a loan inquiry on your credit. And that's what drops your score. So a lot of people might say, oh, well, you know, I needed that extra 20% off at Macy's over Christmas, right? Well, they got a hit to their credit just because they wanted the 20% off. They didn't have any intention of using the card. So things like that, that's where, you know, that's how you decrease your credit. But if we're doing a soft pull, it doesn't hit as a mortgage inquiry or as a huge hit to your credit.
Exactly. And a pre-approval letter in my world as a realtor, I'm going to submit your pre-approval letter along with their offer so that the seller knows, yes, they can pay $400,000, which is what they offered. Yay. Anything that's within 6 months is going to be fine. And to get an updated pre-approval letter, if it takes you longer than 6 months from getting the original pre-approval to purchasing a house, I can get an updated one like that. When I'm working with Candace anyway, that's not to say it works like that for everybody.
Right.
Yeah.
Easy.
So,
we make it easy.
It's super, super easy. It's not going to affect your credit. It is one of those things where if you can have as much documentation already submitted as humanly possible, this is a non-issue.
Right. Absolutely.
Right. But this is when they do their final checks and balances. This is when it goes through the underwriting process and all of the numbers people that on Candace's team are going to do their thing as soon as you start going under contract. The other thing that the bank is going to do is when you are asking for money from the bank or the mortgage company or whomever, they want to make sure that the house is worth what you're offering. This has absolutely happened to me that someone loved a house so much that, let's say they're selling it for $450. There are a couple of offers on the table and people are going, I don't care what it takes. I'm pre-approved up to $500. Make it happen. Cool. I can't just offer $600,000 or $500,000 for that house because it won't appraise for that, which means that a bank won't come in and say, hey, this house is worth $500,000. What an appraiser is going to do is they are going to look at what has sold locally and recently. So are there sales in the area that support this price or not? Okay. So that means if we're offering $450, can I find 5 or 6 other houses within a mile radius that are similar to this property that went for about the same? That is something that I, as a real estate agent, I'm not an appraiser, but I am very good at looking at things and going, hey, this is going to be a problem for the appraisal, or we're going to be just fine. Here are the comps. We call them comps. They're comparable properties. So you're going to hear that word a lot when you're looking at real estate stuff is, do the comps fit the price? And if it does, then the appraisal comes back great. We're fine and dandy. But if we have offered $500,000 and the appraisal comes back at $450, this is a problem. That means that the bank has said it's only worth $450 and we're only giving you $450. Where does that extra $50,000 come from? Either the seller has to come down $50,000 or you have to pay the $50,000
plus your down payment.
Exactly.
The difference in the down payment.
So one of the things that I do in my research, whenever you tell me, hey, I love this house, I'm going to look at the comps and say, yep, they have it priced good, which means it will appraise or they are way overpriced. So even if you think it's worth it and you're willing to pay it, If the bank's not willing to give it, problem, red flag. It means the deal will fall apart.
And what's so important here is also in terms of speaking, just for the bank, but for you guys, you don't want to buy a home for more if it's not the one you want to make pay the difference in, and then it's the home that you have to have for 500. But if it's not, and it's not worth what you're paying for it, it's protecting you as a buyer, saying, hey, do you really want to continue with this transaction?
Yeah.
Knowing that it's not worth what you offered. And then that's when your wonderful agent like Corinne comes in and renegotiates for you. So, there's lots of factors that go into that, but it's a way to protect you and your asset that you're willing to purchase. So
exactly. So let's play a little bit of red light, green light with these contingencies. So due diligence days, full green light, get out of jail free. You are not stuck in this contract. You can get out for any reason whatsoever. Yay. Your financing contingency. This is a yellow.
It is yellow. Yeah, definitely yellow.
You have a certain amount of days to get your loan approval. If your loan gets denied during your financing contingency, which is about 21 to 28 days, and it gets denied based on nothing you have done. You did not go out and buy a car. You did not go out and open a credit card. You did not do anything wrong, but your loan got denied based on the fact that the underwriter thought you had a 600 credit score and your credit score was 4. Right? So hopefully if you have a good lender, this is not a problem, guys, because they've done their research and they're going to tell you, like, this is indicator of you had a terrible lender. You had a person who did not know what the heck they were talking about. Okay. This does not happen very often. If you're working with good people, it doesn't happen at all. Okay.
Right.
But it is a contingency in there, in that if your loan gets denied and it's denied based on nothing you have done, you get your earnest money back. Okay. If it's based on something that you have done, like buying a car, the seller gets that earnest money. Okay. The appraisal contingency is usually about the same as the financing contingency, maybe a little bit shorter, like 21 to 24 days. If the bank comes out there and we have you under contract for $500,000 and the appraiser says it's worth $450,000, you and the seller now have to look at each other and go, hey guys, rather the realtors, honestly, we'll look at each other and go, are we going to come to an agreement or not? If the seller's not willing to come down to the appraised value of the property, you can back away and get your earnest money back. It is protected. Okay. We can negotiate that. There's a lot of what ifs in that moment, but just know if the appraisal comes down low and you cannot come to an agreement with the seller, you can walk away at that point. You can get your earnest money back. No harm, no foul.
And I'm going to flip the script for a moment.
Yeah.
Say you offer $500,000 and it comes in at $525,000. What does that mean?
You got a deal.
You got a deal, but you have built-in equity. We're still going to go back based off the asking price of $500,000 for everything. Nothing changes, but you have built-in equity. So let's just, there's a positive to that the script can be flipped as well.
There is, and that does happen. That does happen where the appraisal comes back high. The seller does not get to renegotiate. You just got yourself a nice little cushion.
And I want to point this out to you guys as well. We do not share the appraisal when it comes in with the sellers. The appraisal belongs to you, and with your permission, I can share it with your realtor. And most people are like, yeah, share it with my realtor. I'm fine with that. But you two are the only two people. We're not going to send it to them and say, hey, it came in at $525,000, and then suddenly they want to renegotiate and redo the contract. That's not how that works. Okay. Yeah. Just so you guys know, we have your best interest in mind.
Yeah. Any questions around this piece of it? Because this piece is where most people have a little bit of like, oh gosh, what do we do? We've got you covered step by step, but any questions so far?
I do have a quick question. Just in your vast experience, Corinne and Candace, where do you guys see the appraisals usually land? Is it close? Is it higher, or is it usually lower?
So Do you want me to take this one or you want to take it, Corinne? Okay.
Yeah.
Okay. So in the past, and it depends on the market. And I'm going to say completely market changes make it very different on your time periods. Okay. And 2021 is different than today. Today, I'm going to speak to today, and that appraisals are coming in at value. People are being very conscious and doing a better job at listening to their agents and pricing homes the way they need to be priced in order to sell. There's always those outliers, guys. There's always the outliers, and it's always going to happen. But I'm going to say 95, 98% of the time, we're not ever going to have an issue with your price value.
Yep.
Cool.
Right now in this market that we're in.
Yep. Totally agree. Yeah. Most of the time it's not an issue. And if I'm worried that it might be a bump in the road, I'm going to tell you like, hey, there are a couple of comps that are a little bit low. Just heads up, this could potentially be an issue. So you shouldn't be surprised if it comes up. And for the most part, nobody is surprised if it comes back a little high or a little low because we've all had the conversation before we got to that point.
Absolutely.
So they're ready for the negotiation conversation at that point is usually how it works if it's high or low. Right.
That makes sense.
Cool. All right. Okay. So then the thing that the attorney is going to do during all of this is a title search. Does the seller have the actual ability to sell this house? You would be shocked. This is an important part of the process.
Yes.
People are going through divorces, people who have a probated property, which means someone has died. Like they're making sure there is no cloud on the title, which means there is no question mark as to who owns it. If all of the people who own the property have signed off and are willing to sell it. That is what the attorney is doing while we are working on due diligence, while Candace is working on the approval process. The attorney is making sure that the deed is free and clear. It does matter what closing attorney you use in order to do this process and to get clear title. For the most part, the attorney we're going to use, they all cost the same, guys. Like there isn't a wild different in fees. They're all pretty much the same when it comes to what an attorney is going to cost. So for the most part, we're going to go with who I tell you to go with because I trust them. And it's who I'm going to put on the contract.
And she's going to make sure that we trust them.
Exactly.
They're not going to delay getting a title until 3 days before closing or something. So that's important.
And I'll tell you what happened to me and Matthew this summer. Actually, this mattered. This almost killed a deal. We bought land this summer. A lot of you who know me personally know we bought land. And this original attorney that we used to do the title search said it's not clean title. And we're like, wait a second. We know that it was bought on the foreclosure house steps. Like I can see the title, the chain of events that happened for this property to get to where it is now. I see the kerfluffle you're talking about, but it was resolved. Why can't you get me clear title? And they're like, nope, just doesn't work. I went to a different attorney who said, yes, this is insurable. Yes, I can get you title. I just need to get the insurance company to give me the green light. Hold on, let me make one phone call. And I went from, oh my gosh, my deal is falling apart to it's totally fine based on which attorney I went to. It matters.
Yes.
So we are going to make sure you have clear title so that there's nobody who can come back 5 years after you've bought the house and go, wait a second, I actually had my name on that deed and I never signed off on this. No, we're not going to have that happen. So that's the attorney's role in all of this. Now, we've gotten through due diligence days. We're happy with the condition of home. We've gotten through the loan process. You know you're approved. The appraisal came back good. The title is clean and clear and squeaky. Now we're getting to closing. All right. We're going to do a final walkthrough because we don't want the house has to be in the same condition you originally saw it in. So if the appliances suddenly stopped working during this month-long process, the seller has to fix the appliances because they worked when I first saw it. And now that we're closing, they better still work. right?
Or make sure they're still there.
Yes, like you didn't,
That
you
happened.
said you were going to leave the fridge and you didn't. What happened? Bring it back.
Bring it back.
Rose bushes suddenly disappear in the front yard. And you're like, dude, no, put the rose bush back.
Put it back.
So things like that, right? That nothing crazy has happened. We're going to do a final walkthrough. We're going to make sure that everything is out of the property. And then we're going to sit down at the closing table. What the closing table is at the attorney's office, they have a nice little fun stack of paperwork that is mostly loan documents and deed documents and all of that fun stuff. And everyone sits down together, the seller on one side, the buyer on the other, signs the documentation. At that moment, when everything is signed and done and dusted and money has exchanged hands, which is what the attorney is going to do, now you own the property. Now, the last thing is taking possession of the home. Usually, and the safest and best practice is for us to write in the contract that possession of the home takes place at the closing table. That day, that minute that I've signed the document and the money is in your bank account and out of mine, I own the property, I'm moving in. Occasionally, you will give the seller a couple of days after closing to take possession. Every now and then, that is something that happens. So taking possession of the home might not happen that minute. For the most part, it does. It might be a couple of days later. Okay, that is the brief overview of the process. There are a lot of what ifs within that situation. I think my best piece of advice is just hire a good real estate agent so that you don't have to worry about the what ifs. A lot of the what ifs are going to be property specific. Does the property have septic or not? Was it built during a time period when polybutylene piping was common? Is that something we need to look out for? This is not stuff you guys need to memorize or know. That's not your job. That's what a real estate agent does. That's what the inspector is for. That's the appraiser is there to do the comps. You have professionals working with you and for you throughout this process so that as long as you're working with people you can trust and who know what they're doing, that's your job, is to make sure that you're working with people who know what they're doing. Then you don't have to worry about every single what if. You can rely on the professionals to help you with all of the stuff that might happen, and just worry about your main job, making sure you're happy with the condition, quality of the home, and the financing. You're happy with that at the end of the day. Any other questions about the process and the steps? Helpful? Okay. Quickly, I kind of feel like we went over this. This is why you have a buyer's agent, is to help you consult, make the best decision, to find the house, to negotiate the contract, and to get you to the closing table, right? I'm not going to hit all of that again because I feel like we kind of did it while we were going through the steps and processes. But I know for the most part, everybody is going to have questions about the financing piece of it more than anything else. So Candace, I'm going to scooch it over to you and let you kind of dive into some of the first time home stuff.
Absolutely. And so those outliers that Corinne discussed, guys, there's in my career and in Corinne's career, we have definitely seen a lot of things. So we're definitely here to help you guys with that. But when we start looking at who is a first-time home buyer, that is someone who has not owned a home in the last 3 years. So say you owned a home 5 years ago, but haven't owned a home since. Well, guess what? You're considered a first-time home buyer. So we're just going to go down this, and you guys stop me because there's, like I said, there is a lot of information packed into this for you guys. So please stop me. Why does choosing the right loan program matter? Well, depending upon the loan program, it affects your down payment and your monthly payment. It impacts how much cash you need up front. And different loans have different credit requirements, okay? Some programs offer grants and assistance. Not everyone will need a grant or assistance. So there's lots of parts and pieces to choosing the correct loan program for you, how much money you want to put down. So we're going to jump over to steps to take as a first-time home buyer. We're going to check your credit. We're going to fix any errors that we discussed earlier. We're going to possibly need to save for a down payment and closing. We're going to get pre-approved, right? And I'm going to help you with the other steps. We might need to take a home buyer education class and work with the correct real estate agent, because if you don't, guys, the parts and pieces to this will be difficult. Okay, Corinne, you want to go to the next one?
Yep.
So what do we look for when it comes to buying your home? We're going to look for stable income. We're going to look at your employment history. We're going to look at your credit score, your payment history. So what does payment history mean? It means basically anytime making sure that you have paid your credit cards on time. You've paid your mortgage on, well, if you're a first time home buyer, you may not have a mortgage yet, but any loans you've paid on time. So the next part is the debt to income ratio. We're going to determine what your debt to income ratio is. Okay. And so depending upon the loan program that we just discussed on the other slide, there is a scale in which your debt to income ratio. So what is the debt to income ratio? It is how much you make compared to how much the potential home that you're interested in is. So we're going to compare the two. What percentage is the home taking of your income? Okay. And then we're going to say, we're also going to do something called total debt to income. So that's all of your expenses on your credit report, not your water, not your power, any of that, just what reports on your credit and the potential house payment compared to how much you make. Okay. And so we also look at your assets. We look at bank statements. We look at any stock, any IRAs, anything that you might have that you might want to liquidate or pull from for your down payment and closing costs. Okay, we're going to do that property and appraisal and inspection. And I spoke to that earlier. We don't require an inspection, but we're going to highly recommend that you get one. Okay. Because an appraiser is not an inspector. An inspector is not an appraiser. Those are two different people. Okay. Mm-hmm. So, and we're talking about costs. What do you need to be prepared for? You need to be prepared for a down payment. And again, varies based on loan, whether we're going to do, a zero down payment loan or put down 20% or more. That makes a difference. Your closing costs. Closing costs are anywhere from 2 to 5% of the home price. All right. You're going to pay for the home inspection. Okay, $600 to $800. Corinne's going to find she has a list of reputable people that she would recommend for home inspections. I don't know why I need to spit the marbles out tonight. And the appraisal is anywhere from $500 to $1,000. Okay, and we say a range because every property is a little different. If you were going to buy a property that has a cabin on it. Well, that's a specific property type that's going to require more out of the appraiser. A property that has lots of acreage, a unique property of any sort, what are they called that are built in the ground? I just went.
Oh, I don't know. I call them hobbit houses.
Hobbit houses. That would be another one. Okay, guys. And then of course we want you to be prepared for moving costs, and that varies based on your needs, whether you're going to need a full team of people to help you pack up your entire home and move, or maybe you just need the heavy furniture. And then also what we want to make sure you do, and a good lender is going to make sure that you have this, you're going to have some emergency savings. And that's going to vary. We're going to have discussions about what is your comfort level after you purchase the home. We want you to be prepared to have a couple of months saved. Is it always possible? Maybe not. But when we're talking about savings, we're also talking about your retirements and anything that you might be able to pull from in case you had an emergency after you purchased a home.
Yeah.
Okay, questions on that? Because I'm going to dig a little deeper, but questions on those specifically. Okay, we're going to keep going then.
All right.
So we're going to talk about loan programs. Okay. So FHA is the most used first-time homebuyer program. Okay. It requires a down payment as low as 3.5%. Credit scores are lower. You can go down to a 580 to qualify. they're more flexible with past credit issues. So maybe I see this a lot. I hope that this hasn't happened to any of you, but divorces sometimes gets a little messy. And our credit, one person thought the other person was paying, or they quit paying, or vice versa, whatever may have happened to your credit. Again, that's why we want to do this up front, to try to resolve those credit issues. But sometimes there's just things we may not be able to fix. FHA overlooks those, okay? FHA requires monthly mortgage insurance, and is only available for a primary residence only, okay? So that's kind of FHA. Questions on FHA. And there's a lot of what ifs still in, like Corinne discussed. There's a lot of what ifs, guys. What if this, what if that? And we will play through every single one of them. Everyone's situation is unique, just like their credit scores are. Everybody's different and unique, and that's why we have multiple programs available. And then we have conventional loans. And for first-time home buyers, there's also availability to go down to a 3% down payment, okay? So we were talking about 3.5% on the FHA, but conventional loans can go down to 3%. You're like, okay, what's the kick here? Well, the kick and the catch here is that they're typically going to be a little bit higher scores. We're going to go 620 and higher, all right? And why that plays an important part is these loans are backed by Fannie and Freddie, okay? And so they've put in place scores that are a little bit higher because, again, they're not going to necessarily have a mortgage insurance premium like FHA that's backed by the government, okay? Also, something with conventional mortgage insurance can be removed later once you reach 80% of the value, okay? So this is a good option for buyers with strong credit. You guys hanging on there? I know there's lots of information.
On either loan, what did you just say? The insurance can be removed on either an FHA or conventional?
So FHA is for the life of the loan. And conventional, it can fall off when you reach 80% of the value. Okay.
Yeah. The other thing too, the difference is that because you're putting more down typically with a conventional, they're cool with a couple of issues with the property, whereas FHA, you're putting the least amount down.
Right.
So like everything has to be working. You can't have missing flooring. You can't have, so think of it, the less money you put down, the more input the bank has on the condition of the property.
Yes. She thinks property, I think money.
Yeah,
It's a great combination. So, and the thing too, to say on this 3% conventional down payment is there's options if you have a higher credit score to get a lower monthly mortgage insurance too. Okay. When you're not putting down 20%. So there's that additional benefit of being a first-time home buyer. And then of course we have VA. Is there any veterans out there?
I don't think there is on
Okay.
the call.
All right. Well, this is a no down payment loan for veterans who are approved. There's no monthly mortgage insurance, and they have lower interest rates on average. And then a VA funding fee may apply. It kind of depends on their service record, which we would check as well. Okay. I think we have a couple more. Okay. Okay, a USDA loan. So to kind of explain it, it is backed by the U.S. Department of Agriculture, and it is for more suburban areas, okay? The more rural areas. It is very property specific on whether you are eligible for an area or not. It has household income limits. It has lower mortgage insurance costs, right? And all of this, again, as Corinne said, the stricter, this one is backed by the government. So the stricter they are about certain particulars of the loan, okay, there's more restrictions, which this is no down payment. So there's 0% down payment with this one, okay? So when we are looking at that, again, it's specific to more rural areas. We're not going to see any in Gwinnett. I don't think there's any in Forsyth currently. You're going to, look to your more suburban and rural areas. And so the next topic, those are your different types of loan programs. So your next topic here is down payment assistance programs. These are offered by the states, by the counties, and by the cities that we live in. So what these do is they provide grants or low interest loans. Okay. It's often paired with an FHA or a conventional loan. It will require, I have not run across any that do not require a home buyer education course. So you would have to do that. And it can greatly reduce your upfront cost. But here's the kicker on these. Again, they're bound by, offered by the states and the counties and the cities. So there are some restrictions on these with credit, with your credit score and how much money you make. So there are some restrictions to down payment assistance. And within these programs, I get this question a lot. Well, how much will they pay? Well, it depends on what state you're getting it from, whether it's coming from the state, whether it's coming from the county, and whether it's coming from the city. Some of them might give you $5,000. Some of them might give you a percentage that you can use towards closing costs and down payment. Okay, so they're not going to say which one you have to use it for. Some of them require that you have a minimum in the transaction. Like they might say, I want them to have some skin in the game. I'm not going to give them all of this money and them not have any skin in the game. They're going to require you to at least have $1,000 to $1,500, depending upon the down payment assistance programs. Okay.
So Candace, if I tell you all my financial stuff, can you just tell me which ones I qualify for?
Absolutely.
Yay.
Yes.
That was my question. Thank you, Corinne.
Because you're not going to know which ones you qualify for without handing all of your financial stuff over to a lender and saying, what can I do? It's so dependent on so many different variables.
There are y'all, I know I sound like a lender because I'm like, boom, 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 boom. And I feel like I have to say this because y'all, there's so many other variables. You might make too much for one. You might not have a credit score enough for another. You might be, not in the city limits, you're right outside, or they might be specific to like this certain area within the city that this down payment assistance is being offered. So there's so many variables, but do we check to make sure? Absolutely.
Yeah,
absolutely. And we'll discuss it with you. What do you feel comfortable doing? Some of them require payment back if you were to move out. Some of them don't have to be paid back as long as you've lived there for 5 years. And some of them are actually just attached to free money. So, there are definitely requirements, and we definitely check all of those for you guys to make sure that there's not any programs available that you qualify for.
And real quick, is that something we could do like during the pre-approval process, like early, or we wouldn't have to like pick the house and be like, okay, for this house specifically? I'm sure some maybe like, very specifically, but like if we're just in the county, or if we're in the city, is it safe to say we have some that are already kind of figured out?
Right. Absolutely. For sure. If you say I want to be in Gwinnett County, what do they have in terms of down payment assistance that I qualify for? I can tell you just based on your assets, your income. For sure, we can tell you if there's any that you qualify for. So if you know kind of where you're looking, that helps up front with the down payment. But on our end, what happens, just to kind of go over with down payment success, they also review your file to make sure we're telling them all of the facts. It's like a book of you that we're presenting to the underwriter and to the down payment assistance programs to make sure that you qualify. So,
yeah, exactly. Okay. So we've taken a little bit longer than I intended. I apologize. I want to be really respectful of everybody's time this evening. Everyone who's here this evening is going to get a copy of this slide deck. So this is just a real quick overview of who pays for what. You guys already know you've got down payment unless you apply for something that requires no down payment. You're going to have some loan origination fees, some inspection fees, buyer attorney cost, moving cost. This is something I am happy to go into great detail with each and every single one of you, but I'm going to put a pin in it for this evening since we've already gone a little bit over time. And just get to, are there any massively big questions that you guys have for us that we have not touched on that you wanted to make sure and not leave this evening without getting this question answered? We were that good.
Woo! I feel like I have marbles in my mouth tonight, guys. So I am so sorry. I promise I didn't stop by a bar on the way home or anything.
That's
I
for
do
after.
feel like I need to.
Yeah.
But yeah,
Taylor,
we'd love to speak to you.
questions?
Any questions?
All good.
Okay.
You both did great. You didn't speak with marbles.
Okay.
I
Okay, good.
understand.
Good. Thank you. I kind of felt like I was tonight. And my major is communications, so I should be able to speak well.
You're good. I'm going to send this to everybody, but the bottom line is talk to Candace first. Knowing your money and what you are financially happy with is going to be wildly important to the rest of the process. Even if you're like, I am at least 3 years away from buying a house, make a phone call to Candace. It is only going to help you. It really, really is. And then once you really know, hey, this is where I financially want, I'm a good conversation to have when you're about a year out. I know that sounds like, wow, a whole year. Yeah.
Yes.
Yeah. And I'm not going to bother you. I'm not going to call you every other weekend. Like, how about now? What about now? What about now? If you tell me you're a year out, I'm going to believe you. Okay. And I just want to help make sure you're prepared for the process, that you know what the market trends are going to look like. Right now, I'm telling you, 2026 is going to be great for buyers. And even if it's at the end of this year that you're looking for, that's fabulous. And if I know that you want to buy 12 months from now, and in 6 months, something happens with politics, because politics affect real estate market. If something happens in the economy, if something happens with tariffs, and it is going to affect the real estate market, I'm going to pick up the phone and say, hey, I know you said you want to buy 6 more months from now. However, this thing is affecting our market, and I need you to know about it so you can make an informed decision. So that's
And that goes for me as well. Like I would pick up the phone and say, hey, market's kind of shifting, whether it be positive or negative. It's
You're
either
gonna
time to
wanna
get on the fence or let's go or let's hold back. So
exactly. You're going to want to know. So I hope that was helpful for everybody. There's my marbles. I'm sorry we took a little bit longer than intended. But I recorded this session. I've got the slide deck. We are happy to answer any one-on-one questions for you guys. And thanks for hopping on. I appreciate it.
thanks, guys.
Appreciate y'all, man. Y'all have a good night.
You
Thanks.
too.
Guys,
See you
Thank
guys.
you. Have a good night.
Thanks. Stop recording.